All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla has actually ended up again in bearish territory. I had stated yesterday they needed to break through resistance so this can continue to work its way up, and it ended up breaking through support, broke through the 50-day moving average, and reached newer lows. So let's look at our new support levels based off of today's chart and see our new resistance level for tomorrow. It's going to be very important to pay close attention to this tug of war as it plays out and as we see it unravel for tomorrow and the next coming days. So let's go ahead and see what we have to look at here closely. So the 50-day moving average is 417.73. Super important to keep that in mind. 417.73 is going to let us know where we're at in the chart, if we're in bearish territory or bullish territory. Currently we're below it, and that means that we are in bearish territory. So for the bulls to go ahead and get back into bullish territory, they do need to cross the 50-day moving average. But before getting there, they need to break through resistance. And their first resistance, while the stock is currently at 406.23, they need to break through the resistance level of 412.30, turn that into a support, and start to work their way up to newer highs and new resistance levels. Now, I want every investor to keep in mind that breaking through this resistance level and turning it into a support does not signify that the bulls have gained possession again or gained control over the chart. They don't gain that until they break through the 50-day moving average of 417.73, turn that into a support and break away from it, getting deeper into bullish territory. This is just the beginning of an indicator for us investors of where the momentum is heading, and as the bulls are getting closer to their goal, it gives us some insight that the bulls are slightly gaining leverage, but it does not mean they've gained control or that they're going back to bullish territory. This is just the beginning catalyst and the first point that the bulls need to break through so that they can start to reach those goals. And it starts off at 412.30, turning it into a support and breaking away from it to get closer to the 50-day moving average. Now, on the other hand, we have what the bears want. The bears want to break through support and hit newer lows. If we zoom out, you could see that this is one of the lowest points in a while, since literally October 6th, and that is one of the lowest points from this slight bullish run from way down here at 350 all the way up to 450, and from that point forward it dipped. So we are seeing right now Tesla at one of its lowest points within the last month, and here we are hanging out at 406.23. And if this was to break through support, I want to emphasize to all investors, pay very close attention to how this stock is reacting, how quickly is it moving to newer lows, and who is dominating this chart. Currently it's at 404.42. I'd pay very close attention to how the stock is reacting at that point and who is dominating the chart. Pay close attention to the behavior and how quickly this is pulling further away from the 50-day moving average, right, in a downward direction, and are the bulls trying to reappear to bring this back up. As always, I hope you guys find these videos and information and cues helpful and informative. If you guys do, and you're a first-time viewer and subscriber and feel inclined to go ahead and hit that like button, please do so. That way you can say thank you to me by the click of a button and also give me that positive feedback that you enjoyed the video. Now, if you're a first-time viewer and investor that has not already subscribed to my channel, I highly encourage you to. You should definitely do it. There's a lot of great information here. I do daily videos, and also share this with your friends and community. For those of you that are first-time subscribers, don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.